You ever hear the saying, what goes up must come down? That was common before the space program kicked in. All right, we can send stuff from Earth that it never comes back. So whoever started that adage didn't know much about something called the escape velocity of Earth. If you can launch something at 7 miles per second, that's fast, but we've done it. That object, even though Earth will continue to tug on it and try to slow it down and bring it back, it will never come back. It'll reach the edge of the universe before it returns to Earth. So,
Yeah, exactly. And what so many traders do is they fall into the trap of that old adage, what goes up must come down. Not at all true. Let's look at gold today. So, how many traders were trapped in this aggressive move at the high of the day, at the new hour, 10 a.m., trying to go short? A lot. And what happened? Underheat straight away, stop pump. Is that by design? Leave that to your own judgment. But this is a classic trap at the high of the week, pulling traders down only to stop you out. Indeed, the trend predator indicator signaled a setup. This is in playback mode, so it's a bit delayed. And it was something that we talked about earlier on in the day, prospects of a pullback. But we had the highs of last month eyed. And that's not to say that it couldn't have dropped. But what I tried to explain in an earlier video, which I will link in the bio, entitled, if I can remember, let me pause the video, Mastering Dixie versus Gold was the title. Stacey Burke, BTS and TrendPredator Pro Insights. And it talked about using the US dollar as a gauge. It's not foolproof, this method, but it certainly can help. If we expand this back to two charts in one, so we've got gold on the left, dollar on the right. At the time, at 10 a.m., what was the dollar doing? What was the dollar doing? So if we look back at the same time that traders were getting lured to go short, the dollar was also selling off aggressively from the highs of the day with a peak formation high in place, fake out high on the day, below Tuesday's lows, reverse continuation into a downtrend, all looking rather bearish. 3 months, let alone 3 weeks of rise. So that there is a market that is in confluence, it's converging with gold. You don't want to see that. You don't want to be shorting gold at the same time that the dollar's selling off as vigorously as it was. So it's not foolproof, as I said, but it certainly goes a long way to help you decide as to whether you've got enough confluence in that market setup that's already counter trend to be wanting to short gold at the time that the dollar's selling off. So just a little pointer there. And then when you look at the weekly chart, yes, it is. It is looking rather toppy. Okay. you do have prospects of a pullback. We've got 1, 2, 3 weeks of rise, but maybe a little bit premature. So you need to be somewhat vigilant of these things, right? Or very of these confluences in the market. So we'll leave that there. Any questions, feel free to drop something in the comments. Subscribe for more content such as this. And if you're interested in a free trial period of the Trend Predator indicator, by all means, hit me up. I'm over at FXstreet, the premium services. There's a fantastic offer at the moment with 3 months free FXstreet Premium Service if you sign up with the designated sponsor broker. And with that, you'll also get 2 months free of the TrendPredator Pro. Good luck with your trading, and thanks for being here. Appreciate you all, and we'll see you in the next video.
Yeah,